So some pretty big news about who's buying Zillow's properties and what this means for the everyday American going out there looking to buy either their first or second home. So I'm going to screen share. Before I do, I'm going to say what's up, everybody in the chat. So this is what's happening right now in the housing market. So as of right now, corporations are buying up about 15% of all of U.S. homes in the first quarter. So 15% of all the properties traded to the hands of corporations. That's a pretty large block of housing, 15%. And what they're saying here is that they're saying investor-owned properties make up 15.9% of all U.S. properties, right? This was about 5 months ago. It's an increase, of course, right? And they're talking about some of the big, the big buyers. So what does this mean for us, and how is this going to play out? Because I have an idea. I'm wondering if this comes true. But if all of Wall Street stops propping up the housing market, will that have an impact on people's, home value? Will home values fall if Wall Street, takes a pause for a second? Not saying they will, but right now the stock market, some stocks are not performing as well. A lot of last night, Bitcoin fell pretty dramatically. ETH fell pretty bad. But I mean, these things can happen. And Wall Street together, they can manipulate pricing if they wanted to get a better deal on future properties. I'm not sure if that will happen, but I think that they're a bunch of very smart individuals. And if there's a way for them to make money, they would probably do it. So what they're saying here is that right now, Zillow is selling about half of all the iBuy homes, and they're going to buy back 750 million shares. 750 million shares. Zillow's disastrous foray into iBuying may finally provide a silver lining to investors. The company's shares jumped on Friday, a day after the company said it had signed contracts to sell more of half of their homes it picked up through Zillow offers. The iBuying unit that it was forced to shutter last month, Zillow also said it will buy back $750 million in stock and raise its fourth quarter revenue estimate for the unit. That includes iBuying by more than a third. Zillow offers is on the hook to sell close to 18,000 homes at the end of the third quarter, 9,790 of them in its inventory, and up another 8,172 in contract. It's unclear how many homes it owns now, but Zillow has scrapped at least 400 contracts despite earlier promises to honor those agreements. The company said it's selling homes through bulk deals with institutional investors, such as Pretium Partners, which agreed to buy 2,000 houses. This is Pretium Partners. They are right here. Now, Pretium Partners, this gentleman, Don Mullen, he was a partner at Goldman. And then, he founded this in 2012. And their portfolio is, it's very impressive. It really is very impressive. You look at the actual scale and how much they are growing with their acquisitions. They're growing year over year, but it's not, just slight growth. Look at this. In December 2013, they had 3,800 homes, then 67. They're increasing by about 50%, or 50% from the prior year in many cases, 30%, slight increases here. But then it starts getting huge, 50% from December 2020 to June 2021, right? Then grew another 10,000 houses. This is from June to September. In 6 months, they picked up another 4,000 houses, right? So they're growing. They're growing very, very quickly. Hats off to them. Zillow raised its fourth quarter estimate for the homes units to a range of 2.3 billion to 2.9 billion, from 1.7 to 2.1. Zillow said it expects the closure of iBuying to be a cash flow neutral, considering its inventory, operating, and restructuring costs, and Zillow's offers $2.9 billion in secured debt. Still, with more cash than expected coming in, the CEO, Rich Barton, said it was an opportune time to say we'll repurchase 750 million Class A and C shares. The buyback will let the company reduce the cash balance we built up to support Zillow offers. So Zillow's stock right here, when they started Zillow offers right about here. So December of 2019, right? And so, let's see here. It's not letting me. Hold on one second. There we go. December of 2019. So that is right here at 41 bucks a share. So they were about $41 a share when they started. So they probably started picking up steam. This is when the market actually started dumping, and it started falling because investors said it caused them to Zillow to overpay for homes that they thought they paid too much for. Zillow's share has slid since February, reaching more than half of the market value, right? And so when they started doing this, people were pulling out and selling their stocks. And so as they were acquiring properties, right, the price started going crazy, hit over 200 bucks a share at one point. And now Zillow's property, they're selling their Class A for $43, $59 right now. So right now it's 59 bucks, after hours, $59. So they are going to probably put themselves in a position to really buy back a lot of the stock for not that much more than, when they first started buying in. A lot of people, a lot of big names, a lot of big players have started dumping Zillow stock. But what they've actually done really is just they acquired a lot of single family homes throughout America, and then they're just turning them over to Wall Street. And they're turning them over to Wall Street because for a variety of reasons. The first is that when they sell, if they were to go ahead and list, say 2,000 homes that they were selling or they already sold to Pretium, right? They were to go ahead and list them, they would have to sell, probably they'd have to account for about a 5% commission across all of their houses. 5% commission across all of their homes. It's very similar to what they're considering now as their loss is. They consider a loss of about 6%. I'm going to get to that in a second. About 6% is how much they're going to lose. But if they were to bring in realtors, they would have been about a 12% loss, which would have right here, they're 6%. They're factoring in at this point about $168 million loss on the Zillow iBuying, right? So if they brought in realtors and did a traditional route, it would not only take them longer to sell the asset, they'd have to also pay for the utilities, they'd have to pay for management, any break-ins, any incidences, they'd have to account for this. But when you sell to an institutional investor, you're selling it as a block of property. So they can save a lot of money, but it's unfortunate because these properties likely will not come back on the market for sale. So they will likely just stick with the corporate buyer, right? So Zillow shares tumbled 43% in the past 2 months. Stock's up 9.1%, right? And so this is who Zillow is selling these properties to. Obviously, the 2,000 homes to Pretium Partners, which I just showed you, right? And earlier this week, the paper noted institutional investors already appraising Zillow's property portfolio, America's Homes for Rent, right? They own a lot of property. Let me see here. I had this pulled up. So American Homes for Rent, I think, owned, there we go, America's Homes for Rent. They own 52,000 homes in 22 states. So they were sizing up the portfolio. And Invitation Homes is now owned primarily by BlackRock. Invitation Homes is, let's see here. I'll just pull it up again. 2019, BlackRock exited the single-family rental business when it sold its shares to Invitation Homes, which had become the largest. So they said they exited the single-family rental business, but Invitation Homes is underwriting it as well. So it'd be America's Homes for Rent, Invitation Homes, and Pretium would be likely the players here. We're continuing to sell our remaining inventory the same way we always have. We sell our homes to buyers of all types, which includes individuals, families, individual investors, institutional investors, and nonprofits. So they say. In September, the median price for existing U.S. single-family homes, the kind flippers buy, rose 13%. So I really do wonder how this is going to play out when they take into consideration this. They're selling the thousands of homes in these hot markets, right? But Zillow's online house flipping unit has turned into an embarrassing flop. They expect to lose between 5 and 7% on the failed venture, right? 5 to 7% on the failed venture. And that's how I came to just a conservative 6%. So $168 million is what they are factoring in for the loss on this acquisition, right? And so they started buying in December 2019. But some of the big problems that I see here It's really in behalf of what they're likely going to do. What they're going to do, I think, is very similar to what Amazon did. Amazon in 2018, they had losses that they've acquired from years before, and they were able to essentially write off these losses and do so in such a fashion to where they were able to pay no tax. They were able to pay no tax on this. So when they're doing something like that, hold on, I'm gonna one second here. So someone said the CEO will retire soon. I bet BlackRock bought with the Fed. We can thank Zillow for insanely high home prices. Yep. I'm leaving Florida in a couple weeks. Bitcoin, some buying now, some later in 10 days. Yeah, some people are saying some huge, smash that like button, smash that like button. What's up? How you doing, man? I had to be an insider trader. Nobody could have been that stupid. Dang it. Always late to the live stream. Hit the notifications, man. I hope they yeah, I mean, well, what I think ultimately could happen here is that these properties will continue to get traded into the hands of these corporations. But what I think could very likely happen is if you look at what BlackRock and a lot of these institutional players are doing, I reported on this yesterday, is where if the asset is producing very little emissions, they're able to then lease out they have a certain credit that they're allowed, right? And so they can lease out some of that credit, like they're doing in New York, to other assets. So the more single families they own and the more that they are compliant, they're able to start selling carbon credits and selling these things to other investors. So I think actually single family homes in the hands of these institutions offers them so much benefit because they're able to not only ride the inflation wave, not only control the rental rates of single family homes and rents across America, but they're also able to increase their cash flow through this large new green economy that we're stepping into. I think people are underestimating how big of a deal this is. Larry Fink, for example, BlackRock, said that the next trillionaire, he didn't say it was going to be in metaverse, he said it's going to be in the climate. He said that's the next trillionaire is going to be made in climate because we're changing everything. Everything is changing right now. Just bought a home and the seller breached the contract by not doing all the repairs. Can I go after them in small claims? Well, so small claims is generally for $10,000 or less, right? $10,000 or less. One thing you always want to do is that the seller is going to, let's say, do some repairs. I always prefer just to get a credit from the seller. They can credit at closing costs. What I would do, again, and if this happens to you and you're buying a property, there's repairs, you found this in your inspection report, either you're going to ask for a credit, they're either going to reduce it from the price you're paying for the property, or credit at closing to cover your closing cost. But you never want the seller to do the work. You want to bring in a bid from someone that is, likely going to charge a lot to do the work. Bring the bid in, show that high bid to the seller, then use that high bid to negotiate a price reduction. You take that price reduction and then you go find someone to do it yourself. But if you have the seller do it, they have a conflict of interest to get it done for as cheap as possible or to play games with you. But if they are going to do it, if you are going to have them do it, make sure you have some money left in escrow so they have skin in the game. If they don't do it correctly and they don't get the sign off that from you, then they don't get to access the capital. So you want to be really careful with that. But small claims, the court system right now is so backed up. If it's a couple $1,000, you're probably stuck. But if it's 20 or 30,000 or a very large sum, I would just get an attorney. Do a search for BlackRock and Biden. Well, I know that. I'm very, very aware of that. Just bought a home. Yep, I know. It'll be fascinating to kind of see how this all uncovers. I've had conflicting views on the housing market now for the last month. The last month, I've been very sure that what we're going to let this see is a series of problems in the next couple of months. I've always kind of had that intuition that it's not completely over. We're going to have more problems, right? And now that what we're seeing could be a situation where more stimulus comes out, we could have a situation where eviction moratoriums and those things start to kind of come back into the market. And at that point, people are going to be afraid of inflation. And so they're going to be buying and buying and buying properties. The mom and pop investors that are losing out, maybe their tenants aren't paying, maybe they are just having an issue with their business, they're drying up on cash flow. Institutional investors will be able to go out there and acquire these properties more. But there's also the situation where, let's say that, and this is, this could happen. Let's say that they don't produce more stimulus, which I don't think is likely. I think they do produce stimulus. But if they don't, then we're going to have a situation where there's going to be more distress. Right now, I think it's JP Morgan. They said 750,000 homes are under distress right now due to the forbearance program, right? And so I think that these homes, when they hit the market, the big corporate buyers are going to run out there and acquire these properties. But these corporate buyers, they're waiting for opportunity. Right now, I think what they did over the last year is they really propped up the housing market and gave this market a false sense of security. Zillow is going out there overpaying for property and raising prices in neighborhoods because they're buying homes in such big numbers. It raised the expectation of homeowners when they're selling their assets. Then on top of that, people are also refinancing their properties on this new belief that their home is worth more than it may really be. And so this encouraged people to take out more debt. It encouraged people to have more confidence. And anything could change going forward. The next month or two, anything could change. If you pay attention to what's happening in the headlines, the news, it's not looking like things are just going to go back. That's why if you look at the stock market has been plummeting. Interestingly enough, you have Bezos, you have Musk, you have all these big players just unloading stock. And why would they unload stock, as I mentioned before, if they didn't think that the market was going to go down? Otherwise, they would just borrow against their stock for 1% or 2% and then hold their stock and then acquire the assets that they need. That would be a non-taxable event because you're not taxed on debt. And so that would be a win-win for them, right? Why would they do that? They wouldn't do that if they thought the stock was going to plummet and then they wouldn't be able to sell the stock later at a higher price. So that's why they're selling, I think. I think they're selling because they believe that their stock is worth more today than it will be tomorrow. And I think a lot of homeowners are going to think maybe soon that, hey, now my home is not worth as much as I anticipated, but I have this debt on the asset. What am I going to do? So I do think corporate buyers are going to be really big players in this. I think corporate buyers are probably going to run out over the next couple of years and start acquiring a lot of houses. When you're talking about numbers like this, 15% of all the houses, 16% increase, it says investor-owned units make up 15.9% of all U.S. properties, an increase from 14.8% in Q1, 10.2% a year ago, and just below a record of 16.1% in 2020. So you start to look at how many homes are trading hands. Right now, estimated 2019, there's around 300,000 single-family rentals operated by investors. That same year, well, that has to be understated because Invitation Homes owns over 80,000 homes themselves. Invitation Homes owns over 80,000 homes. Then you have America's Homes for Rent. You have Pretium, which owns 70,000 homes. So I would say 300,000 homes might be a consolidation of the top 5 biggest players. But you have a lot of big investors out there that are acquiring assets from either LA, from New York, from Miami, all over the place. Big corporations that are buying properties. So I think that number is definitely much greater than what they're stating here, which is 300,000. And what I think is very likely to happen, they said that they sent us a letter saying we determined the unpredictability in forecasting home prices far exceeds what we anticipated, and continuing to scale Zillow offers would result in too much earnings and balance sheet volatility. Yeah, it's interesting. What do you guys think about this? Do you guys think that what Zillow did, they did this as a way for them to kind of fix the housing market, set prices very high, and then turn over these assets to Wall Street? And this is speculation. They bought the assets. Maybe they were considering to operate them as rentals, right? And then at that point in time, they realized, hey, we can just sell them off to institutional investors, and we could hedge our losses that way. But then these institutional investors are going to keep jacking up rents, and these homes are likely not going to come back into the hands of middle-class Americans. And then in a worst-case scenario, for Zillow, what they're able to do with these properties is that they're able to write this off against their income come tax time. So, Biden increasing taxes and making things a little bit more challenging. So they'll have these losses to mitigate those gains for over the past year. You should only be able to buy a single family home if you plan on living in it. Well, what do you guys think about Zillow has done? Many may disagree, but it's smart for their end goal. Yep, it is smart for them. It is smart for them, for their end goal. Let's see here. I own Realty Income, Property Group. I hope to lose. Yep, dang it, always. Let's see here. Just bought a home and the seller breached the contract. We talked about that. John, I bought a house in Florida. The inspector said 14 years of life on the roof. It started to leak bad. We got a very reputable roofer. He said only 5 years. So, you can't. I bought a house in Florida. The inspector said 14 years of life on the roof. It started leaking bad. You got that. So you can't. If you get an inspector on and you sign the inspection disclosures, and they give you a quote of say 14 years on the roof, and then you get somebody else out there that says it's 5 years. Everyone's allowed to have their own opinion, right? When you have somebody come out there and they say there's a leak, does that mean it's the structure of the roof, or does that mean maybe a tree from the neighbors fell on the property a couple of years ago and it put a small hole into the roof that no one noticed, and over time water came in and now it's noticeable? It's going to be really hard, but suing is really not as easy as people think, because especially now you have backlog in the court system. It costs money to sue, and it's going to be very hard for you to prove a case based on opinions. I personally would let it go, unless you have a very, very, very good case. Like, it has to be an incredible case. But then again, we live in America. People can sue each other for anything they want. That should be illegal because it's criminal. Criminals determined by the criminals living on Wall Street. Being criminal only means a bit. Yeah, so one thing that I would suggest, my words of advice right now to people that are renting a house, that are, renting right now, is I think the goal should be to own a piece of property on 30-year fixed rate debt. Owning property, because what's going to happen with these Wall Street properties, these corporate properties, a really good testament will be what you see in, Facebook and a lot of these online platforms. You look at the cost to advertise there. The more that they gain market share, independence, the more they increase the cost. And I think the same could happen with housing, with the rentals, with these corporations, because they're going to have higher utility bills, they're going to have higher costs, and they're going to have less competition. They're going to continue jacking up rents, especially if a universal basic income comes in. They're going to be aware of it, and they're going to siphon that money through rents. So if you can buy a property, ideally a triplex or a fourplex, where you can at least live in one of those units and draw some cash flow in, I would do that. But then again, you have to make sure that you pay attention to these new building codes. As I mentioned before, they're all changing. Depending on the market you're in, they're changing dramatically over the next year to year and a half. New York, Miami, LA, all these great markets are changing their building codes and what people have to do to their property. So make sure you're going to buy a property that's going to make sense for you to do these upgrades. In New York, for example, if you buy this isn't really a first time buyer type of deal, but if you bought a 25,000 square foot multifamily property and you did not do the reporting starting March of 2024, then you have to pay $12,500 per month as a fine. $12,500 per month as a fine. And the changes are pretty big. So it's not like you can start this in a year from now. It'll probably take you a year to do the construction. We've been holding out because prices are too high. Yeah, the big problem is that we're all getting taxed monthly on inflation, the holding on to the cash. So you want to be, assets rich, cash poor. That's the key. All right, guys, I'll hop on another live stream in a little bit. Hit the notification bell to join. I'll catch you guys later.